The total addressable market of financial assets in the world, we already mentioned, was 900 trillion US, okay? I like to put a probability that Bitcoin will attain a certain percent of that total global financial assets, and I construct a probability distribution in my head of a continuous distribution. Bitcoin gets a 5% market share of 900 trillion, and that's 900 trillion in today's dollars. What's 5% of 900 trillion, Jake? I know you know it's $45 trillion. What is $45 trillion divided by 21 million Bitcoin? The answer is it's more than 2.1 million US dollars per Bitcoin.
Like Cathie Wood's $1.5 million bull case for Bitcoin, Validus Power Executive Director Greg Foss says there's no way Bitcoin does not hit at least $2 million in the coming years. Clear and strong evidence of this, Foss believes, is the constant debasement of the world's fiat currencies, a situation from which Bitcoin provides the highest and purest form of insurance. According to Foss, there is a 100% certainty that fiat currencies will continue to debase on an accelerated basis because of the global debt spiral. With 100% certainty that all fiat currencies, including the US dollar, eventually go to zero, Foss says it is extremely important to shore up your portfolio by investing in hard assets like Bitcoin, gold, and real estate. However, he acknowledges that Bitcoin is the fastest and strongest horse in the race against fiat debasement, one that is certain to keep increasing in value exponentially as more and more people come to the eventual conclusion that traditional asset classes provide no protection against fiat debasement. Foss himself has a 40% allocation in Bitcoin and recommends that everyone have at least a small percentage of their portfolio in Bitcoin. If the bet pays off as Foss and others predict it will, allocating even 2 or 3% of your investment portfolio to Bitcoin will give you some form of protection through the years. While making his prediction for Bitcoin, Foss states that it's better to give a target without a time frame or a time frame with a sustained trend, without a specific price target. He does the former during a recent interview with Jake Woodhouse on the Bitcoin Advisor channel. During the discussion, Foss analyzes 2 important models for predicting Bitcoin's price trajectory. The first model places the asset's current price value at $250,000, and the other suggests that Bitcoin will eventually hit the $2 million mark. We will now bring some important clips from the discussion. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Also, ensure you drop your comments and observations in the comments section below, as it really helps with the YouTube algorithm so the video reaches more viewers. Thanks, enjoy the video.
I come from a credit background, and the first thing I try to do is value Bitcoin using open market instruments that people can't argue with because it's set by the market, okay? I'm not making the market on credit default swaps of sovereign nations. That's set by an efficient market of participants who are determining what the likelihood of default is of sovereign debt, and it changes on a daily basis, and it's reflected in what's called a CDS spread, or a credit default swap spread, on that particular borrower. And I spent my life in credit. I think credit is a very smart market, generally dominated by people who like mathematics and who have mathematical models. So the first thing I do is I calculate a value of Bitcoin relative to other instruments in the world, and I determine whether Bitcoin is rich or cheap on a value basis. And I mentioned my CDS methodology, and Swan Bitcoin has a guy by the name of Alpha Zeta, that's his Twitter handle. Alpha Zeta produced this thing called the NakamotoPortfolio.com. It's a brilliant open source software portfolio that one of the tools in there calculates the value of Bitcoin using the Foss model of CDS spreads. I ran it this weekend, and using open market rates together with a couple of adjustments that I use, because they're personal adjustments, I get a value of Bitcoin today. A value, not a target. I need to say this. It's a value that can change because the open market spreads change. The value is over 250,000 US per Bitcoin based on that methodology. So that's the value. Now you ask me for a target. Well, don't forget that value changes as the probability of default of sovereign debt changes, because I view Bitcoin as being the anti-fiat. But let's go back to a simpler target price methodology. The total addressable market of financial assets in the world, we already mentioned, was 900 trillion US, okay? So I have a valuation methodology that says it's worth over 250,000, but that's a dynamic measurement. And I have a target in this binary outcome of over 2 million US dollars per Bitcoin, which assumes that 5% of all of global financial assets get moved into Bitcoin. Everything else being equal, that's 45 trillion, or otherwise about twice the size of the US GDP. Point is, you have this target. To make the math easy, let's make it a $2 million price target. And today, and it's in today's dollars, I need to be very clear about that. That's 2 million US per Bitcoin in today's dollars. So we're not talking about appreciation or due to a deflating or debasing US dollar. So you got your 2 million, and the other side of the equation is a zero. Okay? And let's put a probability that that happens, and we'll play a game. I'm not 100% certain it gets there, but if I was 50% certain it gets to my price target and 50% certain it goes to a zero, which is also not really an outcome, but we'll still use it in our probability analysis. 50%, when you calculate an expected value, 50% times your value of 2 million equals 1 million, plus 50% times zero is zero. You add the two together, you get an expected value. That's what expected value analysis is. Meaning, if Bitcoin is trading at under 1 million US dollar per Bitcoin, based on this binary distribution with a 50-50 outcome, you're supposed to buy it and buy more if the price is under a million.
With a 100% probability of rapid currency debasement, Foss says even a 1.5% probability that Bitcoin gets to $2 million is enough motivation for anyone to put at least a small portion of their portfolio in Bitcoin. According to the former hedge fund manager, even if Bitcoin stays below that price target in your lifetime, it's definitely going to hit $2 million or higher in your kid's lifetime. That's why he advocates owning at least one Bitcoin per child. The Valdez Power Corporation executive director says there is probably no greater gift you can bestow on your children to make their life really easy than the gift of Bitcoin. Let's get back to his discussion with Woodhouse.
But here's where the math gets interesting. What if you turn it on its ear and say, okay, what is the probability the market is giving me that my price of 2 million is right? And it's trading at 30,000 US. Make the math easy. 30,000. What's 30,000 divided by 2 million? It's 1.5%. It's another way of saying the market is only giving me a 1.5% chance I'm right. And it's telling me there's a 98.5% chance I'm wrong, right? You get that? Right? 1.5% times 2 million is 30,000. 98.5 times zero is zero. You add the two together. There's your 30,000 current trading price in today's dollars. This is how I like to summarize it. I'm not 100% certain Bitcoin hits my price target, but I'm way more confident than 1.5%. You cool with that? Therefore, Bitcoin is cheap on a probability adjusted basis, as this knucklehead from Canada, Foss, thinks about probability distributions and outcomes. And therefore, I'm comfortable owning Bitcoin at 30,000 bucks. And here's where things get fun. Even at 100,000 bucks per US per Bitcoin, it's stupid cheap, people. It's stupid cheap at 3 times the price. There's no question in my mind that it is the best horse in the race. I'm borrowing that phrase from Paul Tudor Jones. But I believe that every portfolio in the world needs an allocation to Bitcoin because of the certainty of fiat debasement. Now, interestingly, today, when you sent around some questions that people wanted to ask, well, then, Foss, why Bitcoin and not this other thing? And I don't even know what other proof of work coin somebody brought up. Never heard of it. And the simple answer is, first of all, Bitcoin has first mover advantage. Secondly, and most importantly, it is the most secure digital asset, defended by the strongest computer network in the world and defined by its 21 million supply of Bitcoin. So you might say, well, I'm going to start this other coin that's also proof of work, but it's only got 2.1 million coins. It's therefore more scarce and therefore better than Bitcoin. No, it's not, because in order to transfer value over this network, you need security of the network. and I might have a portion of these 2.1 million coins of this quasi new Bitcoin, the network's nowhere near as secure. Like, I just wouldn't invest my money into that protocol for the same risk return advantages of Bitcoin and the security that it offers. So Bitcoin's the only digital asset that protects me against the fiat Ponzi.
Meanwhile, ARK Invest founder and chief executive Cathie Wood has given 3 reasons why she is still so bullish on cryptocurrencies and other digital assets. In a recent interview with Barron's, Wood said, "We see 3 revolutions taking place because of crypto. Bitcoin will dominate the first one, the money revolution. The biggest proof is that when regional bank stocks were falling apart earlier this year, Bitcoin went from $19,000 to $30,000. That was a flight to safety, and we expect it to accelerate. The centralized monetary system we have today is an aberration. We could be going back to the future, before the Federal Reserve existed, under a digital, rules-based monetary system with no government oversight. The 2 other reasons, according to the hedge fund manager, are the potential of decentralized finance, DeFi, and digital property rights such as non-fungible tokens, NFT, or real estate in the metaverse." Wood also weighed in on the regulatory crackdown against the crypto industry, predicting that Coinbase will be victorious in the lawsuit brought against it by the SEC, Wood said. Meanwhile, the legislative branch has awakened to the fact that crypto is a new asset class, and we might need new legislatures to give the regulators some guidance. Those 2 branches of government have given us great confidence that Coinbase will come out of this as a winner. Many Coinbase competitors either haven't entered the US or moved out because of our regulatory system. Coinbase has stayed to fight. We think they'll be rewarded accordingly. What are your thoughts on Greg Foss' interview and Wood's bullish outlook on digital assets? Please drop your comments in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.